This is the Best Stocks to Buy podcast. Looking for quality stock tips? Well, we bring you timely investment ideas based on the latest stock and market outlooks. Our ideas are driven by a proprietary software that reviews, analyzes, and ranks over 6,000 stocks every week. So you may hear the name of a company you haven't heard of before. And you know what? That is often the best kind of opportunity. An opportunity to get in early before the investing masses. The Best Stocks to Buy podcast is made possible by Kind Management Group, a registered investment management firm serving individuals, business owners, and family offices. Hi everyone, this is Mathis Connor with Connor Management Group, and this is the Best Stocks to Buy podcast. Today is Saturday, March 16th, 2019, and this week we'll be looking at the best growth stock to buy right now. Here's our first slide. It's called the setup and the approach. Now, the key objective of this podcast is to present to you a high probability upside potential stock. Now, the key tool we use is a financial model we developed, a proprietary tool we developed that uses multiple valuation approaches across over 6,000 stocks that we review every week. So the view you're getting is not driven by some sensational headline and some popular publication, but focused on increasing readership but our approach is based simply on the best investment opportunity we can find for you. An easy way of thinking about our approach is to think about the method of triangulation that law enforcement uses to locate a cell phone. In our case, we use a form of triangulation to locate a future stock price using different valuation methods. Now, we truly viewed creating such a model as daunting, but I believe I was well prepared for the challenge. I have both computer programming experience as an engineer and over $15 billion worth of transaction experience as a Wall Street banker. So my approach didn't come overnight. I painstakingly reviewed over 40 years of white papers, taking away the best that each had to offer, and then added some of my own tested intuition to implement new data sets that weren't available even as little as 10 years ago. Furthermore, our model uses both historical and projected values and takes into account management's historical accuracy of meeting the projections that they share with the public. Now, a point worth remembering is that these views are based on today, and unforeseen economic report, a regional conflict, or revised policy can change these expectations tomorrow. Now, the benefit of using a professional money manager like Kind of Management Group is having someone experienced in making educated assessments about the uncontrollable, as well as having someone to readily share their opinion on whether a particular event is reason for concern. And now, so what do we have for you this week? The best growth stock to buy now we found to be in the medical services industry. Here's a slide called the industry overview. The medical services industry is comprised of a wide variety of firms serving doctors and hospitals. Now, just to level set, here are 6 large competitors based on market capitalization. Laboratory Corporation, United Health Group, Anthem Incorporated, Cigna Incorporated, Quest Diagnostics, those are the first 5. Fresenius Medical, Amedisys Incorporated, Centene Corporation, DaVita Incorporated, Encompass Health, and those are the last 5. The growth drivers in this industry. The Democrats taking control of the House of Representatives is expected to end repeal talks of the Affordable Care Act, which is usually good for medical service providers. And similarly, Medicaid expansion is expected, which would end up serving more patients. Some of the industry challenges. uncertainty in healthcare, insurance policies going forward, and a hospital managing their expenses while serving the uninsured. On to the next slide. The best growth stock to buy right now, we have determined is a medical services company called Mednax Incorporated. Their symbol is MD, and we see the 6-month upside potential at greater than 50%. On to the quick facts slide. Mednax Incorporated, together with its subsidiaries, provides newborn anesthesia, maternal fetal radiology, teleradiology, pediatrics, cardiology, and other pediatric subspecialty physician services in the United States and Puerto Rico. It offers neonatal care services such as clinical care to babies born prematurely or with complications within specific units at hospitals through neonatal physician subspecialists, neonatal nurse practitioners, and other pediatric clinicians, anesthesia, subspecialty care services, and acute and chronic pain management services. Well, that was a mouthful, but another quick way of thinking about what Mednax does is that they specialize in helping doctors and hospitals take care of babies, especially premature babies. So that's a quick layman's term for understanding what they do. Their website is www.mednax, that's mednax.com. The company is headquartered in Sunrise, Florida. They were founded in the year 1979, and they have 11,875 employees. On to the metrics slide. The annual revenue for Mednax over the last 12 months was $3.7 billion, so the company is sizable. The net income over the last 12 months was $269 million. The cash from operations over the last 12 months was $290 million. The operating margins for 2018 were 20.0%, and for 2019, they're expected to be about the same, though slightly higher, at 20.5%. On to the valuation metrics. The trailing PE ratio for Mednax right now is at 12.3. The forward PE ratio is expected to be 8.7. So a drop from 12 to 8 in terms of trailing to forward PE ratio is significant. And what that means is that earnings are expected to increase. The PEG ratio is at 1.0, and that's usually considered a value investment opportunity. The PEG ratio 1.0 or lower. On to the next valuation metrics. The price to sales ratio is at 0.9. The price to book ratio is at 1.0. And the enterprise value to EBITDA ratio is at 9.2. So we definitely do not have an expensive stock investment opportunity here. The dividend yield is at 0.0%. The company does not pay a dividend. On to the price chart for Mednax. Now, interestingly enough, the stock price has been on the decline for the past year. It was around $47, $48 a year ago, and right now it's trading around $30. But we are very optimistic on the stock because its valuation has plummeted. It is a very, very cheap buying opportunity in our opinion right now, which is one of the reasons why we think it has so much upside potential. On to the next slide. It's called Looking Back and Looking Forward. Okay, so looking back, Mednax's third quarter 2018 sales and earnings results missed analyst expectations. That's some of the reason for some of the pullback. The third quarter sales miss was a result of serving lower than expected neonatal volumes. The shares are trading at lows that they haven't seen since 2012. The company, during 2018, recently purchased South Dade Neonatology, that's in Florida, as well as a radiology facility in Tennessee, making for a total of 8 businesses purchased in 2018. Now, looking forward, management is focused on reducing operational costs. Business is expected to grow from the addition of radiology facilities as well as growth in its anesthesia and neonatal branches. Small acquisition opportunities are expected to rise as small players are expected to sell due to reimbursement and insurance coverage problems in the industry. The neonatal focus of Mednax is expected to continue to be less economically sensitive to changes in the economy. As we mentioned earlier, Mednax is presently trading at a very low valuation multiples compared to its last 5 years, leading to an expectation of a strong price rebound considering present price levels. On to the next slide. We call it the why now, the bull rationale. The summary reasons why we expect Mednax to go up are: number one, increasing sales and revenue per share. Next, a low valuation metric right now. And 3, even a lower valuation metric going into the future. And additionally, a reduction in debt. So for those 4 reasons, we are quite bullish on Mednax. Now on to the summary slide. The financial statement quality of Mednax are considered to be good to very good. The net profit trend is increasing, and the price pattern trend, as we've mentioned, has declined, and we think it's creating a great purchase opportunity. Our industry outlook continues to be positive, especially since the Democrats now control the House of Representatives. Our overall market outlook is positive. The economy still looks strong in our opinion. The recent closing price of Mednax was $30.33, and our 6-month price target is $46, giving the stock a 6-month potential of greater than 50%. So it's for all these reasons that we believe that Mednax is the best growth stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care. Bye.
Hi, everyone. Do you often wish you had a better feel for control over your investments? Do you often wish you had the ability to quickly get an answer to a question of yours when it comes to the economy or your investing choices? Do you often wish you had someone to bounce investment ideas off of just to be sure of your decisions? Well, I found you're not alone. And these are the reasons behind my firm, Kana Management Group. Kana Management Group is a registered financial advisor and investment manager in addition to being a podcast publisher. Our clients are professional individuals and small business owners. We help them invest and grow their retirement and savings accounts. Our special sauce, so to speak, is a comprehensive value and growth finding computer program we created that we talk about in our podcast. The program and our approach leverages time-tested growth and value investing principles and then some used by legendary investors Warren Buffett and Peter Lynch. Additionally, unlike others, we are forward-thinking and use social media to both serve and educate our clients and their families to become better investors. We figure the better you become as an investor, the more you'll appreciate what we do for you. We now offer a free mobile app available on both Android and Apple devices that offer our podcasts, additional stock picks, videos, expert interviews, weekly economic summaries, news, and more, including the ability to quickly send us a question or concern to me directly from within the app itself for a quick reply. To learn more about our service and to download our mobile app, just visit our website at www.connormg.com. Or if you prefer, simply give me a call at 281-947-2201. That's 281-947-2201. All right. Have a good week.